Can you hear me?
Yes, sir, we can hear you.
Yeah, I can
Good.
also hear you. Thank you.
Yes, sir.
Yeah. So,
Sir, we'll start at 3. We are
yeah,
waiting for everyone else to join. So,
fine, fine. I was
okay.
getting scared because it was not happening. So I
Yes,
was
yes, sir.
wondering what is wrong. It was asking for enter the password, and you said there is no UN password.
Yes,
So,
yes, yes.
how many have joined till now?
Sir, around 35 participants has joined, and we are waiting for other delegates to join as well. And the rest
Okay.
of them are in the process of joining. So
So,
we have,
hope. So
yes,
the,
sir, we have more than 200 registrations. So we are waiting for
camera is clear.
to join. Yes, sir, the camera is clear.
Light is okay.
Sir, everything is perfect.
Okay. Voice is fine.
Okay. Yes, yes,
Okay.
definitely.
Thank you, sir. Thank you so
Thank you
much.
so much, sir.
Okay. How to change the background? How to change the background to my video?
Sir, you can go to the start video option. There will be an arrow. From there, there's an option of changing the background.
Change virtual background. Yes.
Yes, sir.
Okay. Thank you. Mm, okay, download it is saying.
Hello, can you hear me?
Yes, ma'am, we can hear you.
Okay, good. Thank you.
Good
Thank
afternoon,
you.
ma'am.
Actually, join the event. I'm joining the event. I'm actually going to be logged in from two places, because from my laptop as well as my iPhone, because reason being,
Okay.
I need to do the slides, which is going to come from the laptop. Okay.
Yes, yes.
Okay, and I hope I have the access to just let me see.
Just a minute, ma'am. I'll give you the presenter rights. Then you can share your presentation. Just a minute, ma'am.
Yeah, let's see actually if it works, just to check it out before.
Yes, yes, definitely. Ma'am, right now I have given you the presenter rights, so you can please check whether your presentation
Okay,
is
so
showing.
because this is the first time I'm presenting on, so what do I click? Oh, share, right? I'm assuming
Share.
it's
Yes,
share, right?
yes, yes, yes.
Can you see?
Yes, ma'am. I think it is loading. Yes, ma'am. Right now we can see the
You can
presentation.
see, right? Okay, okie dokie, then it should work.
Okay.
I
Yes,
can
yes,
actually stop sharing, right?
yes, yes. You can stop sharing right now when
I
you're.
just wanted to check, because on
Yes,
WebEx I normally attend seminars. I don't think I've presented on WebEx. I generally
Shweta, good afternoon. Kamal Kishore ji,
Yes, from
namaskar.
let me actually turn the video on here. You guys can see me?
Yes.
Hi,
I
how are
see you.
you?
So I welcome you on the board today. Augustine, welcome. Hello.
Hello, I can hear you, Santoshi.
Yeah. That's what I wanted to check with everyone.
Sir, good afternoon, sir. How are you?
Everybody can hear me. That's good.
Very, very good afternoon, Mr. Augustine.
Yeah, nice to see you, sir, after a long time.
Yes. And I'll just say, member Kamal Kishore ji is there. Good afternoon.
Good afternoon.
Welcome you on the board. Thank you very much for joining. Mohanna, check with the chief economist.
Yes, yes, yes.
Mr. Manoranjan Sharma. Is he here? General Bindal also just check with ED and IDM. हाँ ज्वाइन कर रहे हैं ना अभी केवल एक बार लॉगिन कर लीजिए अच्छा अच्छा ठीक 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 Good afternoon, everyone.
Good afternoon indeed.
I think we can start this going talk. So with the permission of all the distinguished panelists.
Yes.
start now, or we should wait for 2-3 minutes so that one more panelist have to join, Dr. Vatsa, and also maybe 2-3 minutes, and then we will start. 3:05.
Yeah, I think as long as the panelists come, then you can actually start once the last one joins, I guess.
Yeah.
I have just confirmed with Dr. Sharma. He will be joining us in a couple of minutes. He's logging in.
Okay.
दीपक दोषी मैंने फोन पे किया नहीं आ रही
अच्छा,
वो नहीं हो पा रहा है आवाज कर लीजिए क्या होगा ये साउंड का ही है
नहीं मैं आपको इसमें पैनल में करता हूँ मस्ट हैव जॉइंड एज ए पार्टिसिपेंट मोहना जस्ट
अच्छा वो ईयरफोन है कि आवाज बहुत कम है नहीं आ रहा है कि नहीं आ रहा है बहुत कम
Okay.
see that where he is which whether it's a panelist or
Yes, sir. I'll just check in the panelist link.
okay. He has joined. So I think all the panelists have joined. Dr. Vatsa will be joining in a couple of minutes. In the meanwhile, I can see Kishori should yeah,
Sir, Dr. Sharma has joined as a panelist only. We are just not able to see his video. So otherwise we can hear you. We can hear him.
So, can we start now or what is? I think we should start.
Yes,
no?
sir. I think we can start and everyone else can join us gradually.
So you take the lead and then we will,
Yes.
yeah, so start.
Okay. Very good afternoon to everyone. A very good afternoon to everyone. I welcome all the distinguished panelists and attendees for today's webinar on economic recovery post COVID-19 and cascading disasters, 15th Commission report. So today we have all gathered to deliberate and discuss on the challenges that has emerged due to COVID-19 pandemic and further pay forward for sustainable economic recovery by incorporating disaster resilience, especially as under the lines of 15th Finance Commission report. For deliberations in this regard, we have with us Major General Manoj Kumar Bindal, who is presently the Executive Director at NIDM. He has several years of on-field experience of managing the challenges in disaster scenario. We also have with us Shri Kamal Kishore Sir, Honorable Member NDMA, who has over 22 years of experience in the field of DRR at different levels. Dr. Krishna S. Vatsa, who has been working in the area of disaster risk reduction and recovery for the last 25 years and is presently serving as Honorable Member at NDMA. Dr. Sweta Saxena, who has been associated with IMF and is also presently serving as the Chief in the Macroeconomic Policy and Financing for Development Division at UN SCAP. She has led several economic projects related to macrofinancial issues at the global level. Dr. Manoranjan Sharma, who is presently the Chief Economist at Infomerics Ratings and former General Manager, Chief Economist and Chief Learning Officer at Canara Bank. He has over 300 publications and several books to his credit. Mr. Joseph Augustine, who is presently the CEO at AXA XL's Reinsurance. Having set up the reinsurance branch in Mumbai, he is also responsible for developing AXA XL in reinsurance presence in India and the neighboring countries, and he has more than 40 years of experience at the reinsurance industry. Uh, I once again welcome all the delegates and participants on behalf of the organizing committee. And for the further proceedings, I hand over to Professor Santosh Kumar sir, who is the convener of this program and has been conceptualizing this program to set the context and start with the proceedings. Over to you, sir.
Thank you very much, Mohana. Good afternoon, everyone. The distinguished panelist, Dr. Krishna Vatsa, member NDMA, Sri Kamal Kishore, member National Disaster Management Authority, the CEO of Alexa, and Manoranjan Sharma, the chief economist of the former chief economist of the Canara Bank, and Sweta ji, who is the head of the microeconomic division of UNESCAP, and for also the senior economist of International Monetary Washington DC, and the General Manoj Kumar Bindal, Major General Manoj Kumar Bindal, Executive Director of National Institute of Disaster Management. I take this opportunity to welcome all the dignitaries, panelists, and all the distinguished participants who have joined so far. 110 participants have joined so far, and we are expecting much more during the course of time. Indeed, it's my pleasure to welcome all of you on a very, very important and contemporary issues where this COVID-19 was a big challenge for most of the world. And we had a larger challenge in terms of coping with this. Most of the countries had adopted the social distancing, wearing of mask, hand sanitization, and also the lockdown. The biggest impact of this COVID-19 came, other than the health, is that economy. So economy was also the biggest casualty. And many of the countries have brought across the globe different packages for economic recovery, so that India also, that 20 lakh crores of the economic recovery package was brought in by the Honorable Prime Minister of India a couple of months ago. Now we had this central budget also, and this Finance Commission, 15th Finance Commission report also. So, and we are seeing this in the context of that development as a whole, that how economy is going to recover, and that what are the challenges which we have, and in the cascading disaster scenario. Like when we see, and we have already seen that India also faced 3-4 cyclonic storms and big disasters during the COVID-19 time itself. So economic recovery was, on the other hand, the challenge is going on, and then is one or the other disasters happening at the same point of time. So this was a real crisis situation for the country, and that all economists there and disaster management specialists, they were struggling how to bring the economy on this shape. Disaster management in India also is a challenge, biggest challenge in terms of that we started way back in 2005 with the National Act with the provision of disaster mitigation, that ex ante is much more appropriate than ex post disaster response itself. And so that after going through all the deliberations for all long years, finally the 15th Finance Commission has been able to brought that change. And National Disaster Authority had played a very, very important role. And the two stalwarts who are here, member Dr. Krishna Vatsa and Sri Kamal Kishore, they have maneuvered the whole process. And Dr. Krishna Vatsa, his engagement was even much more in terms of in the writing and supporting with the different. You can say that it was through and through in the whole process, along with the other members, Mr. Kamal Kishore. So I take this opportunity to welcome all the dignitaries who are here, and I have just got the message from ED and IDM that we can move on and then we can take this the program further. So I would request here to Dr. Krishna Vatsa, if he has already joined. Otherwise, I can, yeah, Dr. Vatsa is here. So, Dr. Vatsa, we have one international speaker. If she's attending this probably this particular webinar from Bangkok. She works with SCAP. She is also from she's from Washington University. We are from Washington University. Both are using from there. So I wanted you to give a kind of a reflections that which is going to have a 20 years of a 10 years of a new kind of financial system in the country for disaster reduction, risk reduction. And we will also request after that our chief economist from Canara Bank seeing this budget overall, that how economy recovery, and then we will have international experience from Dr. Sweta, and then we can have this reflections on insurance, very pertinently mentioned in the Finance Commission report. And then at the end, I would request Mr. Kamal Kishore also to give some reflections of his report. So in this, in the very beginning, I would like to request Dr. Vatsa to deliver his insights and experience, and also that the how 10 years should be planned in the country now in the context of there, and also that finance commission allocation, where the state has to come up with a very, very strong program for the future. So many of the state governments are have joined today. So I would request and welcome you for this. Dr. Vatsa is a very, very kind of a long association in the disaster management, from the collector to the relief commissioner in the government of Maharashtra, belonging from the Indian Civil Services, and IAS officer from Maharashtra cadre. His deep interest in disaster management led to the PhD in disaster management, and also work with the United Nations based at New York. And currently he is gracing National Disaster Management Authority and bringing many ideas for the future of the country. Dr. Vatsa, I take this pleasure to welcome and invite you. The floor is yours.
Thank you. Thank you, Santoshi. Thanks very much. Am I audible?
Yes, yes. Little bit
Okay.
vibration.
Pretty clear.
I think if the people could mute themselves, that would be. Yeah, I think it is better. So thanks very much for the invitation, and I think in the last 1 week we have two major developments. One, the presentation of the budget, annual budget, and the second is the presentation of the Finance Commission report. And both have strong implications for the direction of risk financing. Santosh ji always is very quick to observe how some of these things could influence the direction and the trajectory of how we support disaster risk financing. And I think it is his idea, which I greatly supported. When we feel strongly about anything, we immediately organize a webinar these days. So it's good to organize this event and reflect upon what these two important developments hold for us. Before I come to the budget and the Finance Commission recommendations, I would like to just discuss about the government spending on the pandemic. The government of India actually found 3-4 ways to support the expenditure on the pandemic. One was the resources available through National Health Mission. The second was the Prime Minister Cares Fund, PM Cares Fund. Third was the State Disaster Response Fund and to some extent the National Disaster Response Fund. And the fourth was a certain amount of borrowing from the international financial institutions. So the government managed the total spending through these sources. We have been interacting with the state governments, and at no stage did I find any state government complaining about the lack of resources in dealing with the epidemic. The government ramped up all the important facilities for dealing with pandemic, including addition of new beds, ICUs, ventilators, oxygen related facilities in a very short period of time. And I think all the states had access to enough resources and liquidity to take care of all the supplies. So I would say that it's indicative of a very strong public finance system for risk management. The government had the essential foundation of the disaster risk financing, which is available through the National Disaster Response Fund and a State Disaster Response Fund. But at the same time, it also diversified its sources and tapped the other funds. So that was one area of expenditure. The other area of expenditure was the social protection. As you know, it also caused a huge distress among the people, particularly those who are engaged in informal sector, those who are wage laborers, and the government took steps to do large-scale cash transfer and at the same time also provide food security. So we had this thousands of crores being transferred into the people's accounts, as well as the free provision of the food grains through the PDS. And I think there were two mini budgets that were, I would say, that were announced, one through the Prime Minister Garib Kalyan Yojana and then the Prime Minister's Atmanirbhar Bharat. And both of them allocated a huge amount of resources for the social protection. So again, it indicates the kind of resources that could be made available for dealing with the crisis and reaching out to the people. So, and still I would say that the government could manage all this quite well. Our economic shock has not really come from the spending on these things. Our economic shock has come from the lockdown and the slowing of the economy. So if there is a resilience lesson here, it's that how do we insulate the economy from these kind of shocks, not so much from the spending to deal with the crisis. Spending in a crisis is always good, provided it leads to alleviation of the distress and the creation of livelihoods, assets, and revival of the economy. Now, let's look at the budget. I think in the previous budgets, we would always be concerned about the fiscal deficit targets. We would be more concerned about our compliance with the FRBM Act. in this budget, we were not in the list concerned about the FRBM Act. In fact, it was the exceedance of the ceiling imposed by the FRBM Act that would really provide the real stimulus for the economy. So we are looking at 9.5% of the fiscal deficit, and no one is actually raising any eyebrow about this kind of a fiscal deficit. So the basic thing here is this, that when we are dealing with a crisis, it's very important to borrow and spend. It gives us relief, and it also revives the economy. But only important rider is that the spending should be done wisely, and it should create assets, it should create livelihoods, it should bring buoyancy in the economy. So this is one way of bringing back the normalcy to the economy, as well as dealing with the crisis. I think the second most important thing about the budget is the commitment of rupees 35,000 crore for vaccines. Now, this provision of 35,000 crores in one go actually deals with the entire issue of vaccine inequality. There is a government provisioning. Everyone will get the vaccine almost free of cost, and it could vaccinate at least 50 crore people. One of the largest vaccination programs in the world, and all the people, irrespective of their income or status, could access vaccine. So this is another very, very important step in dealing with the pandemic. I think the third important thing, and which is more systemic, which is to upgrade our public health services. And definitely the pandemic was a reminder of improving our access to the public health, that we need to, the government is very much under obligation to provide to the people. And the deficiencies really brought out the need to strengthen the public health system, reinvigorate it. And in the budget, we have seen a huge increase in the public health outlay. The fourth important thing, again, rising out of this, the economic restructuring, liberalization, privatization, is the increase in the FDI limit for the insurance sector. Now we have 75% FDI in the insurance sector. Given that insurance sector in India is expanding, this would provide a very welcome signal. We would have more products, more services through the expertise available through international insurance companies. So all that is very promising, and it really provides the right kind of solutions and long-term directions for dealing with pandemic. However, it does not have immediate, or I would say direct, implication for disaster risk reduction, because we are, so far as disaster risk reduction is concerned, we are free of the annual budgetary cycle. The provision for disaster risk reduction is made through the Finance Commission over the years, and that has actually helped us, all the states as well as the government of India, get access to disaster risk financing on an assured basis, on a predetermined basis. So every state government would know how much resources are available in a given year. A little bit of perspective on the Finance Commission and how it really got into the business of disaster risk financing. Right in the beginning of 1950s, when the states started receiving devolution of resources, they could not manage the finances largely because of the floods and droughts they experienced. And then there was a realization that, it's the disasters impose a cost which they cannot really manage with their existing resources or existing allocations. So the Finance Commission was tasked with the idea of helping the states deal with the disasters and emergencies. And right from the first Finance Commission onwards, the Finance Commission, the institution, which is a constitutional body, has been making recommendations for disasters, and it is now an established practice. For 5 years, it determines the kind of assistance that will be available to each state, based on the expenditures that the states have incurred on disaster management. Over a period of time, I think it has undergone significant evolution. There are different ways in which the resources have been allocated. At some point in time, we had National Fund for Calamity Relief. Then we had the NCCF, National Contingency Calamity Fund. And then finally, 2005, when we had the disaster management legislation, we set up the National Disaster Response Fund at the national level and the State Disaster Response Fund at the state level. So this is how we have been doing the public provisioning for disaster risk financing. There were problems with this arrangement, and which were pointed out to the Finance Commissions. One, that the allocations were not risk-based, and second was that that certain functions of the disaster management are not really supported by this kind of the provisioning. The third problem that also came up was that these funding, these resources are actually inadequate, and they need to be diversified, and we should have more multiple sources of financing disaster risks. So the 15th Finance Commission now has addressed many of these issues and have come up with a very comprehensive set of recommendations, which have now been accepted by the government. And I would like to present some of the key recommendations here. The most important recommendation is about the quantum of resources, that the government, that the Finance Commission has recommended altogether $30 billion for the states and the center for the 5-year period from 2021 to 2026. Now, this has been divided between the states and the center. The states get the total amount is 228,000 crores. So about 160,000 crores is with the states, and about 68,000 crores is with the center. Then the other important thing is this, that now we have two funds instead of one. One is the National Disaster Response Fund, and the other is the National Disaster Mitigation Fund. And the same structure replicates at the state level and the district level. While there is no financing for the district level, a specific financing, a specific allocation for the district level, and the states are expected to devolve the funding further to the district level. At the state level also, they have the State Disaster Response Fund and a State Disaster Mitigation Fund. The distribution of these resources between the state and National Disaster Response Fund and a State Disaster Mitigation Fund is along 80-20 ratio. So 80% is with the National Disaster Response Fund and State Disaster Response Fund, and 20% is with the National Disaster Mitigation Fund and State Disaster Mitigation Fund. Within the National and State Disaster Response Fund, there are three other windows. Earlier, the entire money would be spent only on response and relief, and this would not lead to any creation of livelihoods or assets, and it would not support the other functions like recovery and reconstruction, preparedness. That's why the Finance Commission has created three windows within the National Disaster Response Fund and the State Disaster Response Fund. So 40% of these resources it would be taken up by response, 30% by recovery and reconstruction, and 10% by for preparedness and capacity building. So now we have the four functions, the four quintessential functions of disaster risk management: response, recovery, preparedness, and mitigation. All four of them supported by distinct funding windows, which means that all the states will have enough resources to support these measures. And if they fall short of these measures, they can also come to the center and ask for more funds. So far as all the, and this is the most important innovation or development, that all the functions of the disaster management now could be supported financially, which was not the case earlier. Now, what is even more important here is this, that they have suggested that earlier the states would submit the request for very fantastic amounts, 30,000 crores, 40,000 crores. And the government of India would not be able to consider those requests. So in order to discourage that, the government of the Finance Commission has suggested the graded cost sharing system. The graded cost sharing system is this, that if you are asking for say 200 crores, then you have to pay 10%. The states would have to share 10%. And if you are asking for 250 crores, then you have to share 20%. And if you are asking for more than 250 crores, then you have to share 25%. So whenever you are going to the center and asking for resources, it would not be free. The states too have to contribute their own share. So this would discourage irresponsible demand for resources, and the states would be very much be responsible for what they have to contribute in addition to the central allocation. Apart from this, there are 6 earmarked allocations, and these 6 earmarked allocations are, again, they respond to very important issues that the country is facing. One, of course, is expansion and modernization of fire services in India. Second, a whole lot of people are threatened by coastal and river erosion, so their resettlement need to be supported. The third is drought preparedness. Fourth is seismic and landslide risk management in hill states. Urban floods, which have emerged as a very, very important, significant problem in all the major cities. So it has made allocation for all the major cities which are facing this problem. And finally, mitigation measures to stop erosion. So all the important disaster risk management issues have been given specific allocations out of the NDRF and NDMF. So that we do not have to ask for resources anywhere, we can just develop the programs and implement them in partnership with the states. The Finance Commission has made a specific allocation for COVID separately, which does not figure in this chapter, but it has also made an allocation of 14,000 crores for vaccines, in addition to what the government of India has made. Now, in addition to this, the Finance Commission has also recognized the need for diversifying resources. And that is why it has recommended the Government of India to consider additional financial services and instruments, some of which include the floating of reconstruction bonds. Whenever a state is faced with a big disaster, it has suggested the contingent credit or the standby facilities with international financial institutions, so that if you have to go and borrow from any international financial institution, you do not have to wait for a long time, and you can borrow quickly, as it happened in the case of COVID. It has also recognized the importance of crowdfunding platforms. People are contributing to disasters, and they could be a source of very important source of funding for disasters. And the corporate social responsibility window, that is also is a very important source of funding. Now, all this need to be operationalized. We need to really make these tap these additional sources of funding, and we need to find ways how to really make it work. Finally, the Finance Commission also has come up with a host of recommendations regarding insurance. And it recognizes that with the growing income of the people and insurance services being more widely available, being more affordable, it is time to expand the insurance market. And they have also suggested several insurance pathways. One, of course, is the national insurance for disaster-related deaths. Right now, we just provide one-time assistance to the people who die in disasters. So, in addition to the lump sum assistance that we provide, ex gratia assistance, we also should provide them, a long-term assistance through insurance. It would work as a social protection scheme. Then it has recommended synchronizing relief assistance with the Prime Minister's crop insurance scheme, so that the farmers could get the benefits of the crop insurance as well as the relief assistance at the same time, so that the assistance becomes more substantive. It has recommended setting up a risk pool for infrastructure protection. Infrastructure is a big category. They keep suffering losses, and if they set up their own risk pool, they would find it easier to find resources for recovery and reconstruction as well as mitigation. And finally, the access to international reinsurance for outlier hazard events such as this pandemic. So this, unlike other finance commissions, this has clearly recognized the importance of insurance as an important risk management mechanism, and recommended several ways in which the government should, both at the central and the state level, should expand access to insurance services and instruments. So all in all, the Finance Commission has made very wide-ranging recommendations, but the central theme is this, that it has provided a very strong foundation for public provisioning of risk financing. With $30 billion that is available to the states and the center for the next 5 years, we can really use this money to we can leverage these resources to attract more funding, to diversify our risk management mechanisms, which is very, very important. Finally, it's also very important for us to spend the money wisely and judiciously. So it's not that we just spend the money on response and relief, which does not lead to any assets, and it's just meets the subsistence needs. It's of course important, but At the same time, when we are spending about more than 200,000 crores, we should definitely, the spending should lead to the creation of assets and livelihoods. So these are some of the important takeaways from the Finance Commission recommendations. I would just conclude by saying that risk management is both science and art. It's science in terms of understanding the hazard and risk. It's art in terms of getting more creativity to the to risk management. While public provisioning is absolutely essential and it provides the essential foundation, we just cannot bank upon the public provisioning. We need to diversify and add more layers, to our risk financing. We need to tap market-based instruments. We also need to tap the resources available with the NGOs and private sector, and finally, this is the insurance is an idea which time has come now. India needs to go in for mass insurance, first through the social insurance pathway, and then finally through the commercial insurance. So this is really the direction of the risk financing as it appears to me after this budget and the presentation of the Finance Commission recommendations. Thank you very much.
Thank you very much, Dr. Vatsa. It's a very, very, what I can say, insightful presentation, taking out from the budget part and also the COVID management, how Government of India led to different process, different financial mechanism, and how this addressed COVID-19 by allocating, say, 30,000 crores of 35 or 36,000 crores rupees for this the kind of vaccine. And we say that all over the world, economists are saying that if you don't vaccinate or don't do the vaccine, probably the confidence and the economic system will not come, so the economy will not rejuvenate. This is very, very important in the context that how that 35,000 crores which will help in putting everything into back on the track, plus the Prime Minister's this 20 lakh crores recovery allocation with the budget. And now when we say that this is the first time that 68,000 crores of rupees, almost 68,500 crores, which you have mentioned in the first time, is a dent in the disaster risk management financing system in the country. And you very lucidly highlighted that how NDRF and NDMF have been classified, and more than 14,000, almost 14,000 crores rupees have been allocated to mitigation, and 80% NDRMF, 54,000 and 770 crores will go to this. So larger fund, but these funds are allocated differently and different type of work, which you have mentioned in terms of graded cost sharing. So grading is important. So graded cost sharing is so not the privilege of that one state can do to another. Then need diversification also mentioned about the contingent liability that any of the states who get affected that they can access that multilateral funding. Then crowdfunding also you have mentioned about this, other than the recommendations which have been given by the Finance Commission. And certainly insurance is coming as a big way in terms of literally mentioned in the Finance Commission report as that how we should go for insurance and reinsurance, and how that could be linked also with the Prime Minister's relief and then crop insurance. So insightful in terms of that how states should plan in the context where the new budget schemes are available, and also the graded cost sharing is also involved. So this is the underlying that is not very lucidly that you can go as a kind of every time you put up a mandatory requirement. Also you mentioned that, and PDNA is also important now as a part of the recommendation. It's not based on the memorandum. So this is very insightful presentation, and I'm grateful to you for that. You have brought in at the very right stage in the budget, Finance Commission recommendations, and also that COVID-19 recovery plan is there out to play. So my compliment to you and NDMA for bringing this financial change in the Financial Commission recommendation, and of course the chairman of the Finance Commission, Sri N.K. Singh, which I'm sure that NDMA has been able to maneuver many of the things which we were wanting the disaster management should take that. Thank you very much, Dr. Vatsa, and I would request if you can afford some time with us, then we will request to see that how the reflections of economists coming on this new arrangements. And we have Mr. Manoranjan Sharma. Before we invite Dr. Sweta, Manoranjan Sharma, he has been deliberating on the changing economy, the reforms and everything. So in the context of what Dr. Vatsa has said, and you have been deliberating upon the budget provisioning, and we have a cascading disaster side by side going on, and you have seen the impact, Dr. Sharma. What is your reflection on this? What you would like to deliver? Can you share that? What is your take on this? As an economist, what you suggest? Mr. Manoranjan, I can hear you.
Thank you very much, Dr. Santosh Kumar. It's always a pleasure, privilege to be associated with your institute, which is doing a pioneering work in the area of development studies in general and disaster management in particular. Now, I'm thankful to the earlier speaker, Dr. Krishna Vats, for providing an excellent perspective, which makes my task simpler. Now, what I propose to do, I think Santosh Kumar Sahib has been very kind to give me 15 minutes. So what I propose to do is to give some kind of holistic, broader overview, and then we will drill down to some granular details about how some specific measures could be taken. Now, all of us are agreed that this is a crisis of monumental proportions. This is a time like perhaps no other in this century. And this has severely, I think Dr. Vatsa also referred to the debilitating impact both on lives and livelihoods. Now, in the context of disaster management, all these issues are inextricably interlinked because these kind of monumental, debilitating crises have a severe impact on the financial stability, on regional imbalances, on poverty, destitution, deprivation. Unemployment has been a major concern. Even otherwise, it was a significant concern, but this has accentuated the problem of unemployment in India on a macro scale. Whether you look at the data placed in the public domain by various government agencies or even some private institutions which have done important work in this area, like the Center for Monitoring Indian Economy, which at some time placed during the height of the COVID-19 pandemic to even unemployment rates of 20%. Now, uh, this is a crisis which has hit all countries of the world. If you look at the World Bank data set, which was, I think, placed in the public domain on June 8, they have forecast shrinkage of the global economy by 5.2% this year. The IMF initially, October last year, I think, they forecast the global economy would contract by 4.4%. Thankfully, growth seems to be picking up of late, and the recent data which they have placed in public domain, I think about 2 weeks back, they have reduced the contraction from 4.4% to 3.5%. But despite all this assessment, one fact which needs to be stressed is that at the global level, there should be the deepest recession since World War II. So this is to place matters in perspective. Now, in India, we were already facing a period of prolonged macroeconomic slowdown. But COVID-19 comes on the back of India economy, I think in the last 2, 3 years, has been hit by something what I call as a triple whammy. The triple whammy of demonetization, rolling out of the goods and services tax, and finally, this COVID-19 pandemic. There are certainly some positive factors in the sense of negative interest rates in major markets, huge forex reserves, ample liquidity, and surging foreign direct investment. But high unemployment is rising debt, no investment cycle in corporate credit, weak consumption interest engine, and weakened balance sheet of banks cause some concern at the development process of India. Now, to place matters in perspective, I think most well-informed watchers of the Indian economic scene would recall that the terrible 3.9%. The Q2 contraction was obviously much lesser, but still, we had a contraction of 7.5%. Now, taken in conjunction, what this means is that India went into a recessionary phase. And again, to place matters in perspective, it is important to bear in mind that this would be the first recession in India in India's economic history in post-independence. Uh, this year, there are some concerns that the RBI has placed its monetary and policy. The FM presented the budget. So, obviously, assessments about future growth prospects differ, but there seems to be a wide ranging consensus that this year we may end with a contraction of something in the region of 7.78% to 10%. Businesses continue to lump. There is still disrupted supply chains. There has been demand destruction on a large level, free fall in investment, weak consumption demand, low corporate credit appetite, job losses, and salary cuts. Uh, just to take a broader overview, in the last few months, we seem to have been lurching from one crisis to another. There have been, apart from Corona, there have been locust attacks, earthquakes, distinct certainty of a negative economic growth for the first time in 41 years, border skirmishes with China and Pakistan. So, my simple point here is that there seems to be a battle outside and a war within. In this kind of an overarching macroeconomic scenario, the Prime Minister has appealed to Indian citizens to increasingly purchase local products to strengthen the economy. He stressed, and I quote, in times of crisis, this local has fulfilled our demand. This local has saved us. Local is not just a need, it is our responsibility also. In this context, the concept of Atmanirbhar Bharat has increasingly occupied center space. Basically, when we speak of Atmanirbhar Bharat, as the FM and the Prime Minister have already stressed, we are basically looking at five pillars of Atmanirbhar Bharat, which are economy, infrastructure, system, vibrant demography, and demand. Hence, given the systemic implications of this pandemic for the Indian economy in general and disaster management in particular, the call for vocal for local and Atmanirbhar Bharat needs to be fully implemented both in letter and spirit. Earlier also, there was an attempt to drive the Make in India campaign, but given the double whammy of strict local content rules uh, and prolonged economic stagnation, this plan did not succeed. This renewed thrust on manufacturing stems from the hit to the growth of services post COVID-19 and the inherent sectoral growth limitations. So, three important aspects of reviving this growth path, uh, which will have implications not just for economic growth in the country, but also for distributive equity. I think in the context of disaster management, in the context of broader economic development, relate to improving business environment, enabling manufacturing, and opening up FDI, foreign direct investment in key sectors. Now, since I worked in the banking sector for 40 years, let me make a brief mention of the banking sector, which is a microcosm, which is a miniature model of the larger macroeconomy. Uh, there have been some projections done at the level of the IMF, World Bank, some other agencies, and they have brought out this disconcerting fact that the banking systems of India, Mexico, South Africa will be slower to recover to pre-COVID levels, that means 2019 levels, and the entire process could well go well beyond 2023. So this has severe implications for the entire process of disaster management, disaster planning in India. In this kind of a wider context, three basic questions to my mind arise in this kind of a development discourse. These questions would relate to: is delivery of financial and promotional support adequate and appropriate in the present set of circumstances? What needs to be done for creation of an enabling environment for enhanced private investment? Whether, and the final question, whether these enterprises can perform their conventional roles of employment and decentralized development under a free market mechanism, or a new set of policies tailored to their specific needs is necessary to foster a virtual cycle of regenerative, broad-based growth. To my mind, these questions are not merely academic, but are fundamental to the process and pattern of structural development which we have to look at the moment. There is a compelling need to strengthen capacity building on a much larger scale by enhancing the capacity of ability of industries to market their products. There has been very robust evidence, if you look at the Indian economic scenario, that Indian companies have risen to the challenge by quickly producing essentials like hand sanitizers, ventilator, and masks. All this is very welcome, but now perhaps we must look at giving an impetus to this process, and towards this providing an impetus, to my mind, some of the basic elements of this growth supportive strategy relate to timely, adequate, and low cost credit, technological upgradation, vastly improved infrastructural facilities, systemic approach to market promotion, coordination between various agencies and institutions. This is a tall order, but with the right kind of a mindset, the tunnel may be difficult, the tunnel may be long, but I'm confident that we in India have always shown dynamism and resilience. I am confident that this time it would not be any difficult. It would not be any different. Hum honge kamyab. As the Holy Bible also stresses, this too shall pass. So I'm confident these are difficult times, but the kind of dynamism and resilience the Indian people, the Indian ecosystem, the Indian agencies have always displayed, I think will be able to come out with our heads held, with our heads and mind in the right position. Thank you very much. Thank you, Dr. Santosh Kumar.
Thank you very much, Dr. Sharma, for bringing up the issues related to underlying risks and how that underlying risk probably likely to as a kind of a cause of concerns in terms of increased and likely to increase unemployment, weaker balance of payments, contraction of economy, then poverty. You had talked about inequality, supply chain, and free fall of investment, joblessness, and all. This reminds me, and we were doing a webinar on the child-centric DRR. We found that 200 children have committed suicide during the COVID-19 time, in the 7-8 months of time. Few of the incidences has been brought poverty. They didn't have the money to go to the school and also to have the gadgets to continue their education. So the children they committed suicide in Maharashtra too. So what I'm saying is that these are the concerns which you have raised in the inequality and the budget which Dr. Vatsa has said in terms of that how the budget allocation is there for pre-disaster mitigation and prevention, and also that the vaccine 35,000 crores of rupees. Maybe that would be a possible answer, but the challenge still we find that as a financial ecosystem, and you said that making local vocal, and also that Prime Minister's Atmanirbhar Bharat has a role to play in this, and you said that you have said a lot of hopes for Indian industries that they will come up and they will perform. So thank you very much for that. They will address this inequality, which is making our people who are at risk much more vulnerable. Thank you, Dr. Sama. Now I have this opportunity to invite Dr. Sweta. Dr. Sweta Saxena is currently on leave from the International Monetary Fund to serve as the chief in the macroeconomic policy and financing development division of United Economic and Social Commission for Asia and Pacific. She has been an economist by education also and by practice also. She has done a wonderful report of 2019 SCAF's flagship report called titled Ambitions Beyond Growth. So this is very important, I wanted to mention. And at the IMF also, she has worked on the multilateral surveillance of G20 countries. She did her master's and PhD in economics from University of Washington and alumni of also Lady Sri Ram College of Delhi and Delhi School of Economics. So I'm sure that Dr. Sweta will do the justice in understanding the Indian scenario. But I would also request her to flag kindly some international best practices that how they are combining this cascading disaster risks in the context of COVID-19 and other disasters and planning recovery for the future. Dr. Sweta, if you are there, I would request you to please take the floor.
Thank you so much, Santoshi. Actually, thank you so much for this really nice introduction. Can I get the sharing so that I can share the slides?
Please.
Right now, I do not have share the content. Can I oh, yes, now I do. Just hold on. Yes. Give me a minute, actually, as I begin my, can you see? Can you see?
Yes.
Yes, ma'am.
Okay.
Okay,
great. Thank you so much, actually, for inviting me and giving me the opportunity to present my views on what economic recovery should look like in the post-COVID world. Before I begin, let me just say that all the views that are presented here are my own and do not necessarily reflect the views of the IMF or the United Nations. We had two wonderful presentations, a wonderful presentation by Dr. Vatsa and a really great discussion by Dr. Sharma. So basically more concentrated on India. So instead of talking just about India, I'll basically bring some challenges that the Asia Pacific region faces and what can be done about it. So my entire talk is going to be actually structured around a few questions. We all fully understand that COVID-19 has had a major impact on all countries around the world and has impacted all aspects of sustainable development. But the question still remains that why was the impact so much larger than we had expected? And what exactly was the impact along these three dimensions of economic, social, and environment? Now, the other thing actually, as we think about COVID, it was a unique shock. But this was not the only shock Asia Pacific has ever experienced. We've had lots of economic, non-economic shocks before. So I'll give you a little peek into this year's flagship report that's going to be launched on 30th March. So some of the results from there, I'll actually give you just a sneak preview of it. You're more than welcome to attend the launch, which is going to happen on 30th March. Where in our report, we are looking at what do previous crises have to tell us about policies, and what exactly what are the kind of policies that can help us recover. And as we are wading our way through this crisis, we realize we wish we would build forward a better world, actually. And I'll propose some of the things at the end. Some will resonate a lot with whatever has been discussed before by Dr. Vatsa and actually Dr. Sharma. So you will see a lot of resonance in terms of what India is doing and what actually we would recommend as well. Anyways, let's actually go back to the first question of why was the crisis larger than we had expected? We all know that crises are a great time to do reforms, which in turn can increase productivity and growth. And there's a saying that goes, never let a good crisis go to waste. So why, after the global financial crisis, did we not advance on the 2030 agenda? So here is a little bit of a background for you. We all know that Asia Pacific has become the world's economic powerhouse. It's been driving the world economy for a couple of decades now, basically. And 4.6 billion people, like 6 out of 10 people in the world live in this area. This is the major driver of economic power. So when the crisis actually happened in 2008, I'm talking about the global financial crisis, even at that time, the world was looking up to this region itself to bring us out of the global financial crisis. So nearly half of the immediate stimulus that was given between October of 2008 and April of 2009 actually came from our region, as you can see. And the problem actually is that the recovery, it didn't pay much attention to either social inclusiveness or anything to do with environment. So here, if you look at basically climate risk was shortchanged. If you look at the green stimulus as being a part of a share of the total stimulus or even as a part of percentage of GDP, they were very little compared to what they should have been. So you can actually imagine that it was business as usual. Let's actually continue to grow. It doesn't matter. Everything was still, countries continued with their black and brown policies by providing fossil fuel subsidies and financing coal-fired plants. And not surprisingly, that it has actually led to an increase in carbon footprint after the GFC. And what was most surprising is look at the carbon emission actually at the, just hold on, let me get rid of this. Growth of carbon emissions right after the global financial crisis, it was growing at a faster rate than our GDP per capita. Now, in particular, and we all know that what carbon emissions do to the environment, to the use and the use of natural resources. Between 2015 and 2020, just to give you a sense, 45% of all the global disasters occurred in our region, and the region is home to 5 of the world's 10 most affected countries by climate change. And that was not all. So strong economic growth has always been actually, we've boasted, this region has boasted that, we've been able to pull 1.2 billion people out of poverty. And that is to a certain extent true. Because of high economic growth, of course, 1.2 billion people were pulled out of extreme poverty. And the definition of extreme poverty is $1.9 per person per day. But if you raise your ambitions a little bit above that, you see that, if we actually just raise it to $3.2 a day or $5.5 a day, the reduction in poverty was not as great as it seems on the surface. And of course, the region suffers from inequality in opportunities. This figure is only showing you the distribution of education. Green parts of these bars to tell you the level, less than basic education, and the orange part is basically just basic education, which is less than secondary education. A lot of the regions, especially a lot of the population, especially in South and Southwest Asia, does not even have basic education, which means a lot of these kind of people would be working in informal sector. And think about COVID. When COVID hit, those were the workers that were severely hurt. And along with this, actually, the inequality in opportunities, not everybody has access to schooling and to college and education. There was also an increase in inequality in outcome. So here is, look at the incomes of the bottom 10% in the region. It did double from 1980 until 2016, mid 2016s, basically mid 2010s. But the increase in income of the middle and 40% and bottom 50% was a lot higher than the bottom 10%. And of course, the top 10% and the top 1% incomes grew much faster, which means there has been a persistent increase in inequality actually in our region. And who can deny that? If anybody has seen Crazy Rich Asians, and even if you look at our own countries themselves. But economic growth does not necessarily mean that you deliver well-being. This is just an illustration. On the vertical axis, you see the self-reported life satisfaction. And on the horizontal axis, you see the log GDP per capita in 2017. There is, if you want to say there's no correlation, but if there is one, there's actually negative, which means that higher the income, lower the self-satisfaction. And a lot of research in the area also shows that, higher income can get you happiness and satisfaction up to a certain point, beyond which it does not increase your well-being. Because well-being tends to depend on a lot of other things, as the state of mental health, relationships, peace, security, and those kind of things. So what has happened, this singular focus on just growing, whether it's brown growth, it doesn't matter, whether people are being left behind, it doesn't matter. What it has meant is that it has our region is not on track to achieve the 2030 agenda for sustainable development. So think about all these different 17 goals, these sustainable development goals that you're looking on the right hand side. If they were all on track, they would be at that black line in the middle, which is 2019. And this data is for 2019. By the way, this is something Govt does every year. Our statistics department division comes out with this report, and which is also going to come out next month on 16th of March, which will report the data for 2020. So right now I'm actually just showing you for 2019. You can see that none of the goals are on track to be achieved by the target date of 2030. And in fact, on two of the environment-related goals, which is basically climate action 13 and responsible consumption and production, we have actually, the region as a whole has regressed. It has not even progressed, it has actually regressed. So the thing about all this is that too much focus on economic growth without attention to social inclusion and environmental damage basically has was what made the region more vulnerable to this pandemic. And I'll show you a couple of reasons why. Not enough investments were basically done in healthcare. See, this is one of the goals, achieving the goal 3, good health and well-being, basically is goal 3, which is universal healthcare. So think about, on the horizontal axis, what we are showing you is the government's current health expenditures as a percentage of GDP, and on the vertical axis, you see millions of people, the tests that were conducted during COVID. And if actually anything, percentage of GDP on health spending is something that tells you how good the healthcare system could be, would tell you that they would have a higher sort of capacity to do tests. You see that most of the Asia Pacific countries are on the really close to the zero line, zero access basically. So we were not spending too much on healthcare, and that's part of the thing. People were caught off guard. And then many of the countries have not spent much on goal 6, which is what we call clean water and sanitation. And we know that in pandemic, what you need the most is health and hygiene is water. And 10 countries are severe. More than 50% of their population does not actually have even access to drinking water. So can you imagine how hard it must have been to deal with the pandemic? And similarly, actually, when the shutdowns happened around the region, most people were supposed to work from home, or schools were closed. So that means kids had to actually stay at home and be homeschooled on the internet. But for that, you need the internet, access to internet. And this is just to actually show you that, what was the state of the internet access? Well, on the horizontal axis, you see how many percentage of internet users as a part of population in 2008, and on the vertical axis to 2017. 45-degree line, anything above shows that yes, there were more people that had access to internet in 2017 compared to 2008. Definitely. But again, here you see that it's mostly the high income countries that tend to have higher proportion of people having access to internet. And just having access to internet is not enough, because what you need is also the speed, okay? Speed of internet. And this is basically along the same lines that is giving you the speed of internet, which is again showing you that in 2017, yes, we had faster internet, but again, most of the low income countries, which happen to be a lot in this region, tend to be on the lower end of that. So all this made working from home or even getting school from home was a lot more difficult. Now, during these containment measures, actually, as I said, that their schools were closed. So what this picture is basically showing you is how many of the kids that were who were supposed to have access to school, they could actually have access to online learning. The blue one shows potentially reached through internet or broadband or whatever, and the orange part of the bar shows you that those could not be reached through internet. And here, approximately 150 million school children in South Asia and 80 million in East Asia and the Pacific could not be reached by electronic means, which means that a lot of these kids who've missed school are actually going to have lower opportunities for development, and especially for kids that come from poorer families, because they have fewer opportunities to be educated beyond school. And all these things do show up in the longer run as a scarring in the labor market, as I'll show you a little bit later. So these are certain things that happened, actually making sustainable development being exposed. But what is the impact of a shock, actually? And the bigger problem is that with every shock that a region faces, you get pulled back, which means that the output level that any country has, it tends to go down and stays down forever. And I know it is hard to believe that, because growth rates tend to go up, but that does not mean that the level of output goes up. So just to show you a little bit, in this picture, what you see is Asian financial crisis on the left-hand side and global financial crisis on the right-hand side. So right after the the crisis hit, you see that output was growing and it came down in both cases. And after that, growth returned to normal. So we started growing again, but it started growing from a lower level, which means that after over a period of next decade or something, they were significantly below the pre-crisis trend. If they didn't have this crisis, they would have been on that dashed line. And that's something that creates a big problem for countries. And part of the reason why we have these long-term impacts on output is because, well, we always have an investment never picks up. Something for our region, even after the Asian financial crisis, we could never go back up to the same level of output, precisely because investment never went back to the pre-crisis trend. And this happens mostly because uncertainty goes up during these crisis time, and investment suffers. And you can see it here. Then there are also permanent effects, scarring effects that come from the labor market. Here I'm just giving you an example. Actually, workplace closures to cope with COVID have disrupted labor markets. So in our Asia Pacific region, about 10% or 185 million full-time equivalent jobs were lost in the third quarter of 2020, as you can see. And all these things have an impact in the longer term, because when people lose jobs, they do not have training that they get by being on the job. And once they've been out of job, they have a hard time getting back into the labor market. So all these produce scarring effects. And even if they find jobs, sometimes not of the same quality, so their income, they tend to earn less after that. All these is something called the permanent scars from crises, which are likely going to happen even after this one. And of course, job losses, reduced income, and lack of access to social safety net programs could force people back into extreme poverty. And some of my colleagues have done some work where they've shown that about 90 million people could be pushed into extreme poverty, or about 157 million into poverty when we actually calculate that at $3.20 a day. So many people can be pushed, because extreme poverty, think about it, that's the problem actually. If we have our ambitions too low, that we really need to get people out of extreme poverty, the moment a shock hits, these people are working in informal sectors, they don't have access to social protection. So the moment they lose their job, they don't have any money, any income whatsoever, and they get pushed back into extreme poverty. That's why I was saying we need to raise our ambitions beyond economic growth and beyond this really low levels of extreme poverty. People should actually earn a decent living. Now, COVID, these are the negative things that happened after COVID, but we all also know that there was a silver cloud, because less economic activity also had a slightly positive impact on the environment. And this is just to give you a sense of like certain cities around the region. It is their air pollution levels. The reddish line is in 2019 and the bluish line, dotted line, is in 2020. You can see at the moment we had the lockdowns, of course, air pollution levels went down, and as they've started to actually open up, they've started to go back to previous levels. Okay. Now, these things will happen because as economies cannot be shut down forever, and if actually any history is any guide, 20th century is any guide, the prognosis isn't too good, because if you look at it, this shows all the different the carbon emissions, changes in carbon emissions from 1900 all the way to 2019. After every big shock, there was a drop, but after the shock was gone, we actually see a pickup in these carbon emissions. So unless and until we really work towards reducing them, they're not going to get just reduced on their own. I don't mean to say that we should actually keep our economies shut up all for all times to come, but there are lots of things I'll actually talk about in policies which we can do in order to reduce our carbon footprints. Now, as I just said that, now we are thinking about basically coming out of the crisis and recovering from this big shock. As I said, this is not the only shock that we've ever had. We've had the Asian financial crisis, we've had SARS in the region, Indian Ocean tsunami in 2004. So we've had a lot of crises in the past. Just to give you a sense, this is the left-hand picture, just shows you the number of crises, adverse events in terms of financial crisis, terms of trade shocks, natural disasters, epidemics that we've had. What is quite interesting to note is that somehow financial crises have started to go down in the 2000s. The major financial crisis that the region faced was the Asian financial crisis. After that, in 2000s, we haven't had any. But terms of trade shocks have been going up, and even natural disasters have been more frequent actually now than at least in the 60s and 70s. And on the right hand side, you see that a lot of the poorer countries like Iran and Vietnam, Fiji, Bangladesh, they are the ones who tend to have more frequent shocks they tend to face. And every time, think about it, why do they actually have a hard time growing and actually catching up and becoming richer, or at least having higher income levels? Because every time they have a shock, remember that picture, they always come down, their incomes come down and they stay down forever. That's part of the reason. So how persistent, and so what we do in this upcoming report, this is partly based on my other work basically, but just we are trying to say how persistent and wide-ranging is the impact of these shocks. So this one gives you, it's just for illustration purposes, this is the income per capita of Indonesia. So after the financial crisis in 1997, you can see incomes came down. And it took about 8 years for the level to go, okay, for the income level to go back to the pre-crisis level, okay? And after that, even then, on average, the per capita income, the GDP was basically about 20 percentage point lower. Okay, and every shock tends to have an impact on investment, jobs, poverty, inequality. So in this study, we are trying to expand actually what the impact of these shocks are going to be on broader sort of indicators of development, which is basically social as well as environmental. And here we tend to look at what kind of policies can help, fiscal monetary policies, reserve, and also what kind of structural factors an economy has. So everything matters, okay? The policy response matters, and what kind of institutions you have, that matters when it comes to recovering from any shock. That's all. That's the only point I'm trying to emphasize here. So what you see here is, yes, whenever you have a shock, there is a setback on all three dimensions of sustainable development: economic, social, and environmental. So here you can see that investment, it's an important part of growth basically for jobs and poverty reduction. It collapsed by nearly 20% in the first year of financial crisis. As you can see, the blue line, it goes down and it barely recovers even after 5 years. And inequality in the aftermath of epidemics tends to go up. And environment, if you actually capture environment by one of the indices we use, you tend to see that environment deteriorates after natural disasters. Our results also further confirm that policy choices affect the shape of recovery. As I said, everything matters, right? So in the very first one you look, for instance, financial crisis led to a sharper collapse in investment in countries with rigid exchange rates. So when you have fixed exchange rates, the fall in investment is a lot larger than when you have flexible exchange rate. And epidemics pull down private. In the middle one, if you can see, epidemics pull down private consumption in countries with widespread vulnerable employment more than in peers which have more formal work arrangements. And lastly, on the right-hand side, you see that natural disasters tend to hurt health and education outcomes in countries with poorer infrastructure. Because during natural disasters, roads get blocked or whatever, and there are no roads after that, or schools get shut down basically because there's no access to those schools, or the buildings collapse, whatever. That tend to have a big response on, a much larger response on human capital. Now, just last bit, I wanted to actually mention that fiscal policy is central to crisis response, given that so much has been talked about the budget actually that came out and also India's fiscal policy response in response to the COVID last year as well. It does matter. This is one of the first lines of defense, and our results suggest that Asia Pacific countries have used fiscal policy in a counter-cyclical manner in times of crisis. However, the size and speed of fiscal response has varied. So on the left panel, what you see is that countries with higher debt responded more aggressively to financial crises. Okay, and this could be because they have better access to international capital markets. The center and the right panels basically show that fiscal response to natural disaster was stronger in countries with developed systems of social protection and faster in countries with high quality of public services. So think about it, the quality of your institutions matter when it comes to how effective policies can be. This is just to actually give you a sense, because everybody was talking about the policy aspect of policy response of India in the aftermath of COVID and also the new budget that has come out. It really matters. So let's actually go forward a little bit. So from here, where do we go? We really need to build forward a better world where we need to move our ambitions beyond economic growth towards a green, inclusive, resilient future. Now, very often people have used, you must not have heard the word build forward better, because build back better is used a lot. That term was originated actually as a post-disaster recovery term, build back better. But in the current case of COVID recovery, I think it's a very bad thing to be using, saying that let's go back to 2019. Because we know 2019 was not a very good period. High inequality, environmental degradation is not exactly what we want to go back to. So we really want to build a better world. So how do we do it now? During this COVID crisis, lots of countries had policy packages. But again, they kind of missed a little bit on the gender aspect, on social. So just to give you one example of, like, on the gender aspect, not to spend too much time, that here, out of 441 policy measures introduced in 45 Asia Pacific economies, only 57 of them can be defined as gender sensitive, which means that they were helping women businesses that were run by women, or they were helping compensate women for their increase in their burden for health, for care that happened because of shutdowns and everything. So this is a missed opportunity. We didn't do much to enhance gender equality. And again, it was a missed opportunity for green development too, because a lot of the policies that happened was basically a lot of there were very few basically for green development. So look at the right side picture, because that's much clearer. Since the pandemic, much of the fiscal resources that have been approved to support energy production and consumption are being channeled to fossil fuel without any climate targets or policy reduction requirements. So what you would have wanted was that all these energy related spending should have been unconditionally clean, which means that they should have been actually orange, but pretty much all of them are fossil unconditional, which are basically gray zone that you see. So we missed an opportunity to kind of enhance our economies or move towards social justice and environmental justice a little bit. So how do we do it? We think at the UN that overarching principle is to put the 2030 agenda at the center for post-COVID recovery. What does that mean? That means we need to actually work together. Governments, businesses, general public, they all have to be brought together. And all these three stakeholders need to be actually supported through technology and financing. These are the enablers for recovery. So we all know that Asia, like not just Asia Pacific, how vulnerable people are. So putting people first and leaving no one behind should be our goal. And in our, Santosh had mentioned that the report that we wrote into 2019, we were calculating how much would it cost in additional investments in people in order to reach the 2030 agenda goals for ending poverty and hunger and health and education. And in order to do that, we had calculated that the developing Asia Pacific region needs about $669 billion additional dollars every year in order to get to the 2030 agenda. And so basically, we really need to invest in people. Now, however, public spending on social protection remains very low in the region. So first of all, Asia Pacific average is lower than the global average, as you can see. But even within that, India and a lot of our countries in Southwest Asia spend a lot less, basically, which means we really need to pump up our spending on these kind of activities. Now, another thing that we need to do is basically have redistributive policies to support the most vulnerable. And something we did during the COVID crisis, actually, lots of policies from different governments were coming in to support the most vulnerable. And we need to do more of it, because countries that tend to have more redistributive policies, they tend to have lower inequality, needless to say. And of course, actually, businesses can strengthen people's resilience, because here businesses can make sure that they respect and secure fundamental rights of workers in terms of conditions of work safety, and also that we need to incorporate a broader measure of broader social factors into the entire. So if a business is producing something, it's not just okay for them to be actually paying somebody fair wages, but if they are actually buying products from other companies, they need to make sure down the entire value chain, everybody should be sort of like, adopting the similar measures on social and environmental safeguards. Now, even every individual, like you and I, we think that we don't have much of a power, but we do have power, because we can raise awareness about social inclusivity. We can reveal our preferences by buying things from companies that produce without using child labor, and producing goods that are produced at a low cost to the environment. And we can engage in dialogue with the government. So we all can also help. It's not just that the governments and the businesses are the only ones that need to work on it. But the big thing actually is about greening the recovery. So how can we have to really decarbonize the economies to enhance climate resilience? And in the same study in 2019, when we had done that, we found that we need about $590 billion of additional investment in the region in clean energy, climate resilience for basic infrastructure, resource use efficiency, and conservation for nature. Okay, because all these investments can create jobs, and those jobs are going forward are going to be more secure than the ones people have right now. Okay, so here, what can we do? There are lots of things as new investments. So think about all the investments that countries need to do. These investments have to go through the financial sector. So let's actually green the financial sector. How can we do it? By trying to actually make sure that environment is at the center of all the decision making. Here, a lot of central banks can join the network for greening the financial system. And also companies can be required to have disclosures, the climate related disclosures under the TCFD, because what that means is that they have to actually disclose how climate can have an impact on their net financial worth. So in India, well, the Reserve Bank of India is not a member of NGFS, but only 12 Indian companies are TCFD signatories, just to give you a sense. And of course, they can also provide design interest rates, especially for green projects, or encourage financial institutions to provide subsidized loan rates for lowering cost of credit or improving financial flows. And we can also make sure that governments adjust their inward and outward FDI policy in order to channel investments into sustainable projects. Here, India actually has set up a dedicated investment promotion agency, Invest India, to attract environmentally friendly FDI into the country. Now, what are the other ways to basically decarbonize is to eliminate fossil fuel subsidies. I know that's always the hardest for governments, because whenever I see my family complain about gas prices going up, basically a subsidy is getting removed, I understand it's a very hard thing to do, but eliminating fossil fuel subsidies creates fiscal space for governments. This figure only tells you that, the blue bars are how much subsidy each government is giving as a share of GDP. And the red bar is showing you how much was the fiscal support package like during the COVID recovery as a share of GDP. Can you see that a lot of the countries can cover all of it, or most of the recovery package that they had to give during COVID-19? And on this one, actually, in 2017, India's coal subsidies were $8 billion. They were over 3 times the amount of renewable investment. But having said that, I also want to actually, and our region, by the way, is notorious for having the highest subsidies around the world. Having said that, for India at least, let me say that it's a very good thing that we have investments in renewables that have been rising faster than in fossil fuels. So that's a good sign. But the other thing that they can do is implement carbon pricing. So what does carbon pricing do? Of course, when the price of when you start pricing carbon, that it goes into the price of everything. Prices go up. That means people consume less. Of course, it's going to reduce the carbon emissions directly, but it also provides governments with a tax revenue, gives us fiscal space. So just as a case for India, if India imposes a $35 per ton tax on carbon, then its carbon emissions will reduce by nearly 30% and increase tax revenues by 1.5%. Another thing that countries can do basically is to have emissions trading system. And this is quite common in our Asia Pacific region. So we have about 16 countries that are involved in it, but the price of carbon is still low, between $1 and $29 per ton, which is not high enough in order to even come close to anywhere staying well within the 2 degrees Celsius target under the Paris Agreement. Okay. Now, the one thing that now coming to the businesses, what can they do? They can incorporate ESG considerations. What are ESG? These are the environmental, social, and governance. Is there somebody who has a microphone on? Environment, social, and governance factors. They can incorporate all these into their decision making. And what are the ways they could do it? They could do it by actually signing up to the United Nations Principles for Responsible Investment that tells you how to incorporate social aspects, environmental aspects into all your investments. And here there are only 4 signatories from India. And of course, by also doing this disclosures, which I had told you earlier, where only 12 companies from India have signed up to disclose their climate-related finances. Now, what else can they do? They can also, companies and businesses can also adopt internal carbon pricing. It's considered one of the best ways to deal with climate change and to reduce carbon emissions.
So
And
to just in 2 minutes, you can wind up.
Sure. I'll actually quickly go. There are a couple of slides, but I'll quickly fly through them basically. These were the main ones. This is about internal carbon pricing, which means that 35%, of the companies that have disclosed this use, 35% are actually from the region. Perhaps more of this can be done. And it's very good that in India, 51 Indian companies actually have disclosed the use of our plan to implement carbon pricing. Again, just to give you a snapshot of choosing sustainable lifestyles is one way we can contribute towards greening the system. And here we all know that what kind of things we eat have an impact on climate basically. And in India, a lot of people are vegetarians. They're moving to veganism, which is even better. People use buses as a mode of transportation, which is good. And there should be more investment in those kind of things. And in terms of actually helping using energy, reducing their energy use, basically, there are certain mobile apps that can give you the energy efficiency of appliances. You can choose more mindfully about what you want to use. You can actually choose sustainable lifestyles through basically living in these kind of buildings. And lastly, in clothing, and you need to actually be very aware of the fact that how much clothing has an impact on the environment. Governments can nudge by actually giving you how much of energy you're using so that you become more mindful. These are just ways in which governments can help. So the last bit I wanted to just say is that we've realized that how much it is important to invest in technology and innovation, transition to a more inclusive, greener, resilient society, which means we need to invest a lot in ICT, and we have to make sure that all this ICT is affordable for everybody as well. And so I'm not going to go into the details of this package. Actually, this is what we are going to come out in the next month's report about. In order to build a better future, these are the kind of investments you need to make. And through our investment, we have quantitative evidence of what it will do to the poverty levels, inequality, carbon emissions, and air quality. It will have a good impact, but the only downside is that once you're investing a lot, you put a lot of pressure on public debt. And here you need to figure out ways to finance them. And this is one of those things, I think somebody was already talking earlier also, when you invest, you have to increase the efficiency of that investment. You need to figure out how to get debt relief, think of innovative financing, and even there was a lot that was talked about emergency funding mechanisms. Okay, so let me just finish. Asia Pacific lost a decade after the GFC to enhance resilience towards future shocks. But you know what? We also are given another opportunity to rethink the development paradigm. And at this time, we should make sure that we put 2030 agenda at the center of recovery. And this means that everybody has to work together, governments, businesses, and public, and everybody can make a difference. Thank you.
Thank you very much for a very detailed and very comprehensive research-based presentation, Dr. Sweta. And where you highlighted that the Indian system, which is going on with the budget, and Dr. Watts also mentioned that what kind of a new fiscal system which has come up for financing system for disaster risk management, where that you and Dr. Sharma both highlighted that social inequality and that the distribution issues, and those distribution issues, and we are saying that even if we are keeping our aspirations low, that is 1.5 1.9 US dollar, but when we go to 3.2, that the large number of thing is to be taken as in terms of 156.7 million people are still below the poverty. So then pushing poverty is also as a kind of a challenge for us when we go for a disaster risk management. Ex-ante disaster management, we are saying, and a lot of issues which you have brought in terms of equality, whether education or the accessing health system, or kind of you talked about permanent scars, and a lot of questions are also coming up on the fiscal system and the global green investment, missing opportunity in the COVID-19 and how green investment could have been brought in. And you did talk about the growth gap, which we are concerned about in terms of recovery, and it takes time, but that is possible only when ESG. So and then supported by awareness, preference, and dialogue. We will come to you with a set of questions. But I would, in this, thank you very much for giving a very insightful presentation. And we see the clear link of DRR and also post-disaster functioning and this impact. And whenever disaster happens, and you said that our infrastructure is very poor. We have our member NDMA, but I will invite him a little later, who is heading this coalition of disaster resilient infrastructure, Mr. Kamal Kishore. So in the context of your presentation and the Dr. Vatsa's, I will request him to make intervention. But before that, I will request Mr. Augustine to talk about a little bit of insurance, and Mr. George, Professor George from III can also supplement what Mr. Augustine is saying. Mr. Augustine, you are the CEO of the reinsurance company Alexa. You have a very wonderful career, and before that you have worked with the PSUs and also insurance company, and you are setting up this is here, and you have been part of the India's that NIDM's working group on insurance. So I request you to kindly deliberate what Dr. Vatsa has said, and in the context that economy profile, and where you see this insurance will have a kind of a say, as she's also mentioning social protection. Dr. Vatsa also mentioned about social protection and Prime Minister's program. How do you see insurance in the times to come, in the light of disasters profile, risk profile of the country?
Thank you, Professor. Thank you, Professor Santosh, and good afternoon to all of you. I just wanted to cover briefly the insurance aspect of COVID. I won't be covering a large part of the disasters, but focus myself to the COVID given the time constraints. So we all know that COVID just started as a health crisis last year, in the beginning of last year, and it ultimately ended up with a total disruption of the economy for the entire world. And for the disasters, for such kind of disasters, insurers, how do they respond? So if you take insurers globally, including India and globally, we are used to managing the disaster situations. We are mostly managing the losses that happens by taking care of the losses in terms of payment of claims to the insured public, and large catastrophic losses, whether it is within India or globally also. Global reinsurers are used to these kind of disasters. And these natural disasters is slightly different from COVID in the sense that for natural disasters, all the disasters does not affect all over the world at the same time. So, for example, if there are hurricane damages in the US or earthquake losses somewhere or some floods in some country, it doesn't happen at all at the same time, and it is easy for the insurers to manage those kind of losses. But COVID is entirely a different kind of a scenario. Whole world has been impacted at the same time, and therefore the insurers all over the world could not anticipate such kind of a disaster, and their response from various parts of the world have been different. Initially, for example, in UK and Europe, people have taken it lightly, saying that it will not be a big loss. But as soon as they realized that it is not as easy as they thought, they started estimating what could be the loss. And they came out with numbers like $100 billion insured loss, whether insurance companies can manage. And also there are a lot of litigations happened all over UK and Europe for the clients claiming for loss of business in view of the COVID situation, and insurers taking a stand that the losses to the industry has happened not because of any insured peril, but because of the government decision to reduce the pandemic spread. So there are a lot of litigations happened, and many places awards have come in favor of their claimants, and the insurers realize that it is not as simple as what it was thought to be. And coming back to India, just to save on time, I won't be covering much, but coming back to India, Indian market, I'm talking about general insurance industry in a more focused manner. India has been growing at a very good rate of over 10% CGR for the last 10 years. And it has been doing wonderfully well in terms of comparison with the rest of the world markets, where the overall growth was 2 to 3%. So India was a very attractive destination for many international individuals for the kind of growth it has been going in terms of premium. And health insurers were also doing very well with a lot of health specialized health insurance companies doing very well. And in view of the large population and the concern for health by many of the people coming up for insurances. So it was doing very well. And suddenly, because of the COVID, the lockdown came, and the entire economy disrupted, and the entire country came to a standstill. And we realized that it is having a huge impact on the insurance industry. And then the regulator also realized that it is going to be a serious situation where we need to have immediate action to ensure that the policyholders are taken care and it is managed very effectively. So for all the insurances, we have started giving a lot of leverage in terms of renewal of policies. And then for health insurers, the industry has come out with specialized COVID insurance policies, especially covering COVID. For example, we call it COVID Govt and COVID Rakshak. These are the policies covering only health related claims. In the original health insurance policies, we were only covering hospitalization expenses, but the industry has responded and said that we will all pay claims relating to the treatment at home during quarantine times. And even when the hospitals were not sufficient to treat, hospitals have had hotels and all for settled keeping their patients, and all those expenses were also covered in the policies. So if you take generally in normal course, what are the policies that cover? The business interruption covers are already there in the market. Health insurance is already there in the market. Life insurance provides insurance against natural death also. And we also have event cancellation policies. All these travel insurance policies, all these insurances triggered not only in India but in large parts of the world. This has resulted in huge losses, and the government of India has also realized that health insurance is required, and therefore they have come out with central insurance scheme for frontline workers. 22 lakh workers, including health workers, frontline workers, will all be insured by these. And the regulator has realized the risk that has happened due to this pandemic, and certainly of the kind of risk which can happen in future also. So they appointed a working group to come out with recommendations on how to manage the future pandemic risk in India. And this working group, after discussion over 3 months, have come out with a recommendation that risk pool has to be created for the pandemic going forward. And there is India is known for vaccine manufacturing hub, and there is a lot of activity on terms of vaccine manufacturing. But these manufacturers also had to speed up their vaccine production process, which normally takes 8 to 10 years. They were able to produce within 1 year. But at the same time, there is skepticism about the uh, future consequences of these vaccines, and therefore the producers themselves have come out asking for product liability insurance for these vaccines. And globally, this is not in India. Globally, this insurance is required. For example, in Europe, any European country, if they want to buy vaccine, they should any product from anywhere, they have to have product liability for that particular product. So when they wanted to buy vaccines, they came out with the issue of having need to have product liability insurance before they import. And similarly, but for example, in UK, there is an exemption given to these kind of products, and they said this civil liabilities torts cannot be done against these kind of situations. Overall, we have managed to provide adequate insurance support for this COVID situation, and even for the distribution of vaccines, exactly the temperatures to be maintained, the storages to be maintained, all these have been provided by the insurance industry. So that's how the industry has played an important role in managing the vaccine pandemic situation. And at the same time, we are also looking forward to coming out with long-term solutions in the event of such things happen. In India, I'm also happy to see that the government has responded very well supporting the insurance industry while we work towards insurance of these COVID situations. In the budget, for example, we have mentioned already that foreign direct investments have been increased as a percentage from 49 to 74. It's a very good sign for the government to encourage insurance capital, because as market is growing, in order to meet that additional demands, it's very important to have more capital, and especially the capital coming from global insurers. It is very useful because along with the capital, they also come with a lot of modern technology, modern products, and that way we can develop. Second thing in the budget, what is more interesting is that the health infrastructure, 64,000 crores government has provided for health infrastructure. It's a great boost to the health infrastructure, as we all know that it was not as good as it should be, and we are happy to know that for the next 6 years there will be a spend of 64,000 crores for the health insurance infrastructure, for the health infrastructure. And lastly, I would like to say that the 15th Finance Commission report has exhaustively dealt with the insurance as a risk transferring mechanism, and quite a large part of the report covers about insurance. For the first time, I have seen in the report that insurance has been given such a significant importance in this disaster. So at this point of time, I would not be discussing more. If I have any questions, I'll be able to take, considering the time constraints. Thank you.
Thank you, Mr. Joseph Augustins, bringing all those points and how that insurance company reacted after this COVID-19 as a Kavach, Suraksha Kavach, and the government support of that by the government order, although it was not under the peril, but it was covered as a kind of a building resilience to the system. And the insurance companies' inclusion in the whole management of COVID-19 has come as a big boost. And subsequently, you have seen in the Finance Commission report, as you have mentioned, that it has been given extensively. This kind of a large space has not been given earlier. And then the current budget has also given 70% of the FDI in the insurance sector. So probably what Dr. Vatsa was mentioning, that entire alternative financing is also there in terms of the financing which has been prescribed in the National Disaster Response and Mitigation Fund. So thank you very much and stay with us. We have questions, but I'll take if George, Professor George, I welcome you. Do you have any additional points to mention and your points quickly?
Yeah, thank you very much, Dr. Santosh Kumar and NIDM for inviting me to be part of this session. And my task is to be talking about the insurance part. I would follow and rather complement what Mr. Joseph Augustine was talking about. I wouldn't like to repeat what he has said, but then let me focus more on the cascading part of the disaster. Because that is something which the government needs to look at, and this kind of think tanks need to look at. We have seen different perils, how they impact the country. We have seen how death has happened, how livelihoods have been altered, how people get into certain behavioral patterns because of which the COVID situation went out of hand. It's an anthropogenic crisis. The governance challenges, right from the policeman till where all, a lot of about health workers, a lot of things, and about sustainability of the country and its development, the ecological impacts, the environmental impact, and the economic and development crisis. I focus on the cascading part there. If you're looking at, say, an OECD paper of recent times, we find that uh, there will be a per capita food demand would be falling. That would create a lower food price, lower income for farmers, lesser development, then higher unemployment, and that would impact the industry as well, industrial growth also. So then again, lower nutrition. So there are various ways in which a crisis of this nature, a pandemic of this nature, can have cascading disasters. If you look at another WHO study, the malaria control tools have been compromised as per the WHO studies because of the focus on COVID. So, in many of the developing countries, or rather the countries in the African continent, they expect that there will be more of malarial deaths in the coming years because the focus could not be given on that. So this kind of various things can happen. And we have also seen how the government was trying to control these things. And look at the entire situation. It is not only for one government to do certain things. It is the travel channels. We have got open skies. We have got open boundaries. People travel across various countries. There are people who try to make political mileage out of that country, this country, and then whether my country gets this benefit, or have I found the cure, or have I found the vaccine. There is asymmetry of knowledge and of technology to create vaccines, to create medicines, to test their efficacy. The political equations keep changing, and then the financial challenges. And there exactly is where Mr. Augustine was talking to you about how insurance can help. And let us look into it further. Even is the insurance industry, is it safe in looking at this? For insurance industry also, it is a huge challenge. They are well capitalized, yes. They have the capacity, they have the knowledge of managing these things. But when the insurance company is looking at this kind of a scenario where they have to take care of the financial problems, let us be reminded of a recent case which is famously known as the opioid case, where McKinsey as the advisor, as a consultant, they gave some ideas, they gave some suggestions, recommendations about a product called OxyContin by Purdue Pharma, and ultimately they had to end up paying $573 million as professional negligence. The insurance industry has been covering a lot of professional negligence policies. There are DNO risks. Mr. Augustine was telling you about some of them. Then the Indian regulator has also been very, I mean, the insurance regulator, the IRDA, has been very prompt and keen in seeing that the insurance industry is supporting the country in the proper manner at this time. It issued guidelines. It came out with products. It came out with guidelines not only relating to health, but also about fire losses, about loss of profit losses, about where the mechanical breakdown and things like that come in. These are very vital, as Mr. Augustine was again telling about the COVID situation, about the vaccines, about how the vaccines have to be kept at the right temperature, and all these things are covered by insurance industry. It's not easy, but they are doing that. And this, of course, coming to the brass tacks, the insurance industries will be able to financially help in crisis situations and as well as in cascading disasters. So this financial help improves in managing the crisis, improves the governance situation, improves the systems by which the government tackles such problems, improves access to knowledge and technology, and in all these things we will be able to better influence public behavior. I think somebody's line is some noise. Okay, let me come back. Yeah, so the situation can influence behavior. It can improve governance. It can improve crisis management, because the money coming in at the right time, it can help in knowledge sharing, in financial. I can provide better self-dependence. I'm talking about things like Make in India and Atmanirbhar. All these things need a lot of support at multiple levels, and the government cannot come in and provide money at every stage. So this ex-ante plans for recovering and rebuilding are much in focus, and the insurance industry has been doing it across the world in various other disasters. We have seen it at the time of earthquakes, about floods, about various natural catastrophes, cyclones, whatever. And we have seen it in India. We have seen it in many countries. Only thing is that we need to think of these things ex ante, because the insurers cannot just jump into a situation and risk their money. After all, they also have to survive. So you should give them with a lot of data on which they can work on, a lot of support from the government side. There's a lot of requirement of people working together, and a lot of synergies to come in from the government, the various local government, I mean the state governments, the Panchayat Raj level, and also various governmental institutions like the NIDM, the NDMA. As Mr. Krishnavasta was talking in the beginning, there's a lot of synergies. Thank you.
Thank you very much. You have brought a very good point, Professor George, regarding the cascading disasters, and how by highlighting the McKinsey case as a consultant, and how ex ante it is important to take up. So we see a lot of potential in the next Finance Commission. The state government should start gearing up for ex ante planning for long-term recovery. What Sweta says is the build forward better, and we say that build back better. So maybe we can find some convergence somewhere. This is an important time when Dr. Sweta has highlighted, Mr. Professor Manoranjan, Sharma has also highlighted in terms of the bringing and increased vulnerability and high intensity kind of because of the climate change thing has been we say that we missed out. So vulnerability is likely to increase. So, and large number of infrastructure which Dr. Sweta highlighted that may be at risk in the time to come, where we have all missed SDG agenda. We have not been able to reach what we anticipated that we should be. So in this context, I would request Shri Kamal Kishorji, the member NDMA, who is chairing that coalition of disaster resilient infrastructure global organization supported by Government of India, and Kamal Kishore is a member of NDMA, and he has also worked in the United Nations for long, posted in New York, and advised many countries, and also worked as a regional advisor. So I would request Dr. Kamal Kishore to please highlight in the perspective of the kind of concerns which have been raised by two of our economists in terms of saying that large inequality and challenges of DRR in the future, and supported the financial mechanism which we have. Will that be enough, and we need to mainstream something into the disaster management planning? Shri Kamal Kishore ji.
Thank you very much, Professor Santosh, and thank you for inviting me to this event. We've had 5 fascinating talks covering a very wide range of issues in context. We are already out of time, so I will just conclude in less than 2 minutes. I think for me today, the highlight of today's discussion has been the notion of building forward better, saying not just on growth, but also on sustainable growth, not losing the opportunity of COVID-19 recovery to push for gender equality, infrastructure, and so on, and putting 2030 agenda at the center of COVID-19 recovery. Now, in that context, as we all know, the social infrastructure of our country and many countries, whether it's education infrastructure, health infrastructure, is hugely stretched in the context of COVID-19. The work that was happening on development of large physical economic infrastructure has also suffered in the context of COVID-19. So we have a huge opportunity going forward to actually come to a situation where we can ensure that we are not just building more infrastructure, but we are also building better infrastructure, green infrastructure, which is by itself resilient, but also it does not create downstream risks. This is an opportunity to also decarbonize infrastructure development. So in that context, Government of India right now, along with the United Kingdom, co-leads a global initiative called Coalition for Disaster Resilient Infrastructure, which currently has 21 countries and 5 international organizations as its members. And it's really working closely with countries in promoting this notion of build forward better. And in that context, in the middle of March, we will have an international conference on is going to be a virtual conference that will be an opportunity to engage further on the discussion with you. Thank you again, Professor Santosh and the NIDM team.
Thank you very much. You have been very brief, but we were expecting something more. But you have said that what is the focus of CDRI in terms of bringing is not that missing the opportunity, but also capitalizing this opportunity in the recovery. And said that green development, green infrastructure, and also building forward better. And in terms of the coalition which is working, will we have a much more demonstrative engagement with the countries, which will have a better thing to demonstrate for the, which we say that resilient infrastructure in the times to come. So thank you very much for bringing your points of perspective in a 2 minutes of time. Also, you gave this a larger insight that how the institutions are engaged in this as a kind of a coverage for the future resilience in terms of as a kind of future disasters. Thank you very much for being with us. I had a couple of questions, but I have summarized. I took that questions in my asking those that people are saying that how the green impact which was missed will have a larger impact on the economy, and how these states that they would be actually preparing at this point of time when we have a budgetary provision also. We will have just 5 minutes kind of a discussion. We will close. We have already short over time, but with the request of all the panelists, can we have this kind of a, Dr. Watts is here. I don't know. Dr. Vatsa, would you like to say a few things in terms of listening to all that challenges which have been, people have also asked in the chat box that these are the challenges of the future of the underlying risk and others. How this kind of funds availability, how state government should go with their own readiness, especially when you highlighted as a challenge of a graded cost sharing, which is very, very important thing. Dr. Vatsa?
Just to think of socio-economic recovery from COVID-19, a more targeted recovery program. We have got several programs right now going on aimed at reviving the economy, providing social protection support. But there are certain sectors which are more affected than others, and I think it is time to consider a more targeted support. There would be a huge poverty implication of the COVID-19. A lot of people have been pushed below the poverty line. I hope it is transient, but it is also likely that if you do not provide them the enough support, this kind of a downward slide into poverty could be more permanent and long term. So I think in last few years, India has brought out a very successful, in fact, in bringing the people out of the poverty. And if we do not again focus on them, then it is likely that all the achievements and gains that we have made could be neutralized. So it's important to focus on the poor, focus on the people who have lost out, and deliver. And it's not fair to expect everything from the central government. The state government should come forward and develop programs and mobilize resources. Now we have several channels of resources available, so it's very much possible. As I mentioned, the insurance actually is very, very feasible, but I think it's time also, it is time to go through the social insurance pathway. Insurance coverage and insurance penetration very much depends upon the affordability. And I think if we are just going through, if you go that pathway, I think it would be insurance would become more widespread and people would start appreciating the benefits that insurance can bring. So these are some of the few points. I very much enjoyed this session. Great speakers, and their views were very highly enlightening. Thank you very much.
States. Thank you, Dr. Vatsa, for giving insight to the states in the time in the future, how they should be preparing themselves in the light of all these presentations which we have made and the challenges which have been highlighted, and that the financial the confidence which the new Finance Commission has given, they should not be lost out amongst the state, and that should be preparing with this. Dr. Sweta, I will have a final comment from you. The confidence with Dr. Vatsa and Krishna, Mr. Kamal Kishore and Joseph has given in terms of the actions which government has planned. How do you see as an academics, as an economist, and then as a last point, as a punchline from your side, Dr. Sweta? Dr. Sweta Saxena.
Oh, sorry. I was talking without actually my mic was on mute basically. So thank you, Santoshi, actually for asking me to actually comment on that. I mean, like everything that has been talked about in terms of actually insurance and all these things, they're very good, and I think I do agree with Dr. Vatsa. I mean, like basically, support has to be a little bit more targeted, and the fact that so many people are going to be actually pulled into extreme poverty, back into extreme poverty, and it's going to really undo a lot of the stuff. So all the stuff that the government is doing right now is very good. It has to continue to do it. The only question always comes in terms of actually doing the spending, but how efficient it's going to be. But I think the government has shown that the spending has been pretty efficient, given that we've actually had this jam recently, which has helped actually target the population that we want to help and be able to actually deliver benefits to those. So I think that's good. Just I wanted to make one point. It was quite interesting in terms of insurance and everything that was coming. That's not the sector I deal with. However, one of my papers, given I actually deal with the impact of shocks on output. So one of the papers I worked with was actually about the unmitigated disasters. Actually, like, it was about the natural disasters. Do they have big shocks? Because believe it or not, in economics profession, people still wonder whether natural disasters are good for growth or bad for growth. Kind of like, that's, you would think they don't even actually count how many lives get lost during natural disasters, but that's besides the point. So a lot of the earlier literature used to say that disasters tend to actually help spur growth because, after natural disaster, you need to pick up the investment activity. But one of the papers that I wrote with two of my colleagues from the BIS, actually, it was exploring the role of insurance. And what we show in that paper actually is very interesting, that if you just have natural disasters, like, the impact is going to be as permanent as the one that I showed you. Remember the Asian financial crisis and the global financial crisis, the output comes down and actually stays down forever. But once actually those disasters that have been associated with insurance and, countries that can afford it, they tend to actually recover faster and they don't have that permanent loss in output. So one of the ways to actually go about, at least from your perspective, because you guys do more disaster management, something that I'm not an expert on, but just to actually leave you with that thought that research of mine actually does show that having insurance for disasters can help recover, can actually help economies recover faster without having long-term damage. That's all I want to say. Thank you.
Would you like to say at the last point, or probably he's not there? Anyway, but thank you. I would like to, Augustine, would you like to say something or anything, or we should wind up now?
No, I would like to only thank you, Professor, for conducting the program very well, and thanks a lot for all the participants who are enthusiastically participating, and it was a good participation by the attendees. I have seen large numbers. I hope they gained out of something from these discussions, and we hope to continue such discussions going forward for the benefit of all those who are interested.
Thank you very much.
Actually, I just wanted to add to Joseph, actually, it was interesting for me, somebody who doesn't know much about insurance, to learn that much, getting a good lesson into ours.
Thank you,
Dr.
Sweta, for being with us. And since we have now come to the closer of this very, very insightful and important webinar at the right point, and we could get up some of the finer points, which I would like to read it out, although many, but just to quickly, so that we can take home kind of a global vulnerability is increasing, and because of the economic shocks and also COVID-19. And we have not been able to attain the SDGs agenda, which actually reduces the underlying risks. So that area which we need to work. Poverty, inequality are increasing, and the gender insensitiveness or kind of a gender sensitiveness investment has not been able to make. The green and the more carbon emission is happening, so green part is still required to be focused much more if we wish to reduce future disaster risks. Finance Commission recommendation is considered a watershed for DRR in India now, which has opened large number of windows, and the state government has to now prepare their plan and plan in the terms of future vulnerability, present vulnerability, and also the shades which they have got this in type of shield, financial shield, the new shield which has been provided. The flexibility that provided in the Finance Commission has to be used very, very kind of a cautiously in terms of various windows which have been opened in the Finance Commission. And also that investment in India's health infrastructure and COVID vaccination is a kind of a good support in terms of getting recovery and reducing vulnerability. Insurance and risk transfer is coming as a big way as a kind of a mechanism of response, and which say that awareness generation, which we say that build forward better, and in that AWS you have been highlighting, and ESG is also a take home in terms of, and last but not the least, diversification and cascading disaster insurance role is very, very important. So with this, I think I must convey my heartfelt thanks to all the panelists, Dr. Sweta from UNESCAP. You have given a wonderful, so thank you very much for insights which you have brought in. And maybe we will bothering you in future as well for our program. Thank you very much for your time. I would extend my heartfelt thanks to Dr. Krishna Vatsa, who have given this whole of a framework, and he put in really hard work into making this watershed in financing DRR in India, and whole of NDMA, including Dr. Mr. Kamal Kishore, who is the chairman of the CDRI, who has been maneuvering of ex-ante mainstreaming DRR into infrastructure. So that is the challenge which we need to take up. Many part would be post and ex-ante, but long-term recovery. And would say thank you very much, Dr. Krishna Vatsa and Sri Kamal Kishore for being with us and actually encouraging NIDM for this kind of taking this discussion forward. I'm grateful to both of you and NDMA in particular for being with us and sharing this whole of a discussion. I extend my heartfelt thanks to Sri Sharma, Manoranjan Sharma, who is not here, it seems, but we have lost connection, but extended his point of view as a chief economist and on the budget and deliberations on that. Thank you very much. And the two stalwarts from insurance, Joseph Augustine and Professor George, who have given insight on the this insurance side. Thank you very much to both of you for taking this up. And my team, Miss Mohana, who has been organizing and contracting with all of you. Mohana, thank you very much, but I would be failing in my duty if I don't thank our Executive Director, General Manoj Kumar Bindal, who is not here. He was engaged in other webinar, and he conveyed his that he committed long back, but we had this. So he had said sorry for this and not being with all of you, but just conveying his good wishes for all, and thank from him to all of you. And of course, that participants who have been there, along with our CCDRR team, Dr. Raka, Dr. Balu, and Mr. Ranjan, who have helped in this program, and all the distinguished participants who are actually raising questions and making it successful. Thank you very much to all of you. And I sincerely apologize to all of you for taking extra time and being late for 20 minutes. So I'm sorry, but thank you very much to all of you. Dr. Vatsa, Dr. Sri Kamal Kishore, Dr. Sweta, Professor George, Joseph Augustine, Manoranjan Sharma ji, and all the distinguished participants, and Mohana. Thank you very much to all of you.
Thank you. Thank you. Thank you very much. Thank you. Bye-bye.